Good afternoon, and welcome to our event today, hosted by the Center for a New American Security. I'm Emily Kilcrease, Senior Fellow and Director of the CNAS Energy, Economics, and Security Program. And for the last year, I've had the pleasure of leading the CNAS Task Force on Crypto, FinTech, and National Security, which is a multi-stakeholder effort seeking to advance the policy dialogue on the strategic and geopolitical interests that the United States has in the responsible development of the crypto and FinTech ecosystems. I'm delighted to welcome Undersecretary Brian Nelson to join us today for a conversation on crypto and digital assets, decentralized finance or DeFi, and the work that Treasury is doing to ensure the integrity of our financial systems in light of a rapidly evolving financial technology ecosystem. Undersecretary Nelson serves as the Treasury Department's Undersecretary for Terrorism and Financial Intelligence, which heads up the government's efforts to combat terrorist financing domestically and internationally, implements an anti-money laundering strategy, and combats financial crimes. Undersecretary Nelson and his team have been at the center of the government's work to assess the national security risks arising from new forms of financial technologies. And they've been leading the administration's overall efforts on these topics as part of the broader government work to promote the responsible innovation of digital assets, as laid out in the President's executive order last year on this topic. Welcome, Mr. Undersecretary. And it's fair to say that it's been a busy and interesting time in the digital asset space. The digital assets market has seen a variety of ups and downs with some fairly catastrophic events, including, as many of us know, the spectacular downfall of the FTX exchange and a roller coaster ride in valuation of crypto assets. At the same time, Treasury's been active in trying to use its existing tools, including sanctions, to tamp down on illicit activity in the digital asset space, including addressing well-known and really urgent concerns such as the continued and widespread use of crypto assets by North Korean cyber actors to fund their WNT programs, which is something that we've looked at in our research here at CNAS. We're looking forward to getting into all of this, as well as a conversation of whether the government sees value and opportunity, not just risk, in digital assets. We'll be saving time for questions from the audience, and to submit a question, you can use the chat function on the webpage where you're watching this live stream, or on Twitter using the hashtag CNAS2023. And Mr. Undersecretary, thank you again for being with us. To get us started, I'll turn it over to you for your thoughts on all the good work that Treasury is doing in this space and what you've got planned coming up.
Thanks so much, Emily. Great to see you, and thanks for having me here. I'm really excited to have this conversation. I'm joining you today from the Aspen Security Forum, where I'm joined by global leaders to discuss a wide range of national security issues. And as you all can imagine, a key theme in the conversations here is that rapid evolution of technology and the importance of taking steps to address risks of new technologies while simultaneously, as you noted, Emily, supporting responsible innovation. This theme is, in fact, reflected as a critical component of President Biden's 2022 executive order and our ongoing approach to digital assets across the U.S. government. We know that innovation is a critically important element of a vibrant financial system and economy. But we also know that innovation without the appropriate guardrails can harm the financial system and individuals. And while some may put these two principles at odds or in tension, our belief is that safety measures such as market integrity, protecting consumers, investors, and businesses, and mitigating illicit finance risks are not inconsistent with innovation, but in fact are essential to it. We are working across our department here at Treasury and the Interagency to coordinate an approach to digital assets broadly in line with that idea. Within Treasury's Office of Terrorism and Financial Intelligence, we are focused on making sure that we have the right controls in place to effectively mitigate illicit finance risks while enabling responsible innovation. So I would just offer a little bit today about how we are doing that. About a year ago, we outlined our lines of effort in one of the EO reports, the action plan to address illicit finance risks in digital assets. Our work is still guided by those lines of efforts, so I'll just highlight a few of them. We know that the digital asset ecosystem is rapidly evolving, and we continue to conduct risk assessments to better understand the threat landscape and inform our policy. To that end, in April, we published an illicit finance risk assessment specifically on decentralized finance, or DeFi. The risk assessment found that criminals, including Russian and, as you noted, North Korean cyber criminals, are actively and aggressively exploiting vulnerabilities. In particular, they seek out the non-implementation and frankly, the willful disregard by DeFi services, many of them, of their respective AML, CFT, and sanctions compliance obligations, and proceed to exploit these vulnerabilities to both steal and launder illicit proceeds. Additionally, while many DeFi services claim to be functionally decentralized, our risk assessment found that many are decentralized in name only. In fact, there have been many points of centralization that fall under the existing US AML CFT framework, but they fail to implement their obligations, which presents major illicit finance risks. While we are responsible for developing the guardrails to mitigate illicit finance risks, it is truly incumbent upon the private sector to effectively implement them. We continue to focus on taking appropriate action when we do see non-compliance by covered financial institutions. Unfortunately, our enforcement actions have really indicated that there are many companies in the virtual asset space that continue to violate US sanctions and AML CFT obligations. I'll just offer a couple of examples. Back in October of 2022, FinCEN and OFAC announced parallel settlements with Bittrex for violations of multiple sanctions program and willful violations of the BSA's AML program and SAR reporting requirements. Bitrex's deficiencies left its platform open to abuse by these bad actors, which included Russian money launderers, terrorist financiers, ransomware attackers, and sanctions evaders. We are also using other authorities to protect the U.S. financial institution system from illicit actors and those who enable them to profit from this activity. I'll just highlight two examples of that, and hopefully they're illustrative of some of the key threat actors that we've identified as misusing virtual assets, which of course are a subset of digital assets. So back in January 2023, FinCEN issued an order identifying Bitzlato, a virtual asset service provider, as a primary money laundering concern in connection with Russian illicit finance. This action highlighted Russia's role as a haven of cyber criminals and demonstrated how VAFs like Bitzlato are critical to the facilitation of Kremlin-affiliated ransomware groups and the transactions with their connected darknet markets. Additionally, over the last year, OFAC has designed or designated over 20 people related to misuse of virtual assets. This includes 5 people who were involved in laundering virtual assets for North Korea, which has increasingly, as you noted, turned to virtual assets to generate revenue to prop up its regime and its development of weapons of mass destruction missile programs. By targeting these nodes, we are shrinking the space in the virtual asset ecosystem available to profit from crime. While we are focused on illicit finance risks in the virtual asset ecosystem, I also don't want to leave you all with the impression that we have a negative view of the technology. We know that many industry participants are developing tools to strengthen AML, CFT, and sanctions compliance measures. My team has had productive conversations about these tools and how they can effectively support responsible innovation, and we look forward to continuing to have those conversations. In addition, we are thinking critically about what steps we need to take to ensure that our AML CFT framework effectively safeguards the U.S. financial system from illicit financial activity. So that has meant evaluating whether additional regulations or guidance are necessary for digital assets. The work has included looking carefully at DeFi and its potential to reduce or eliminate the role of financial intermediaries that play a critical role in our AML CFT efforts. While the DeFi risk assessment identified non-compliance by covered DeFi services with AML, CFT, and sanctions compliance obligations as the key vulnerability, it also noted that there may be opportunities to address these vulnerabilities through policy. That has included considering our next steps with regards to the record keeping and travel rule notice of proposed rulemaking, jointly issued with our colleagues at the Federal Reserve back in October of 2020, and referring to the requirement that financial institutions collect and transmit certain transaction information to counterparty financial institutions. Over the next year, we will also be working closely with our fellow member countries of the FATF, the Financial Action Task Force, specifically the Virtual Asset Contact Group, to close the gaps in implementation of the global AML CFT standards, since many countries lack an AML CFT framework for virtual assets and VASPs. As long as these gaps remain extensive, bad actors will be able to form shop VASPs based on if they're in weak jurisdictions and use that form shopping to move, launder, and cash out their illicit proceeds. And just lastly, we will obviously be eager to continue important conversations with a group like CNAS's task force, who have been at the forefront of these pressing issues. So we have already had several production discussions this past year, and we have tremendously benefited from you in the process, notably just how much we can learn through technology demonstrations, and those have been really important to me and my team. So we want to keep these channels of communication open, and I think a great way to start that is by opening it up to your questions and to those who are participating.
Excellent. Well, thank you very much for those opening thoughts. And I'll remind our audience, please do submit questions, and you can do so using the chat function or on Twitter as well. But perhaps to kick us off, I wanted to pick up on this theme of working with the private sector. Following these conversations over the last year or more, it does sometimes seem like the government and the private sector are talking past each other a little bit. Sometimes, particularly, we're guilty of this in the national security community, just focusing on the bad stuff, right?
Yeah.
And there's plenty of bad stuff happening, but you also noted opportunities. You also noted some of the private sector firms who are building tools to help with compliance. So what do you think is coming next for, how we can enhance that sort of private-public cooperation, recognizing that crypto assets aren't going away despite the wishes perhaps of some policymakers. They're here to stay. They're a global industry. We've got to figure out how to wrap our heads around these. What do you think is effective that you've seen work so far, and what more do we need to do on that side of things?
Yeah, no, I think it's critical, and it's noted as a pillar of our strategy, both in the context of illicit finance risks and with respect to digital assets, and specifically in the context of DeFi. And what I think that we have seen productively is one, and hear constantly from private sector colleagues, is like, we got to understand the tools and how they work and sort of their potential, and you have to understand it at a fairly technical level. So the engagement around the tools themselves has been incredibly valuable, I think, and we need to do more of that. I think that's true at Treasury. I think that's true across our government. I think the second thing I note is just hearing where you're seeing misuse of these tools by illicit actors. I hear clearly almost at every private sector engagement, specifically in the context of digital assets, no one wants North Korea to use these services in order to fund their nuclear program. That is not at least a desired outcome anyone has expressed to me. So people, I think, are aware of the dangers there and the significant national security implications, and are motivated to help in that spirit. So I think sort of information gathering and saying, hey, like, we're seeing problems in this sector, I think has been really, through chain analysis and other partners, has been really very effective, and we need to frankly continue to do more of that. And then the third thing is obviously the development and the design of these tools with AML, CFT, sanctions, list compliance really built in from the beginning. I think a theme, you take sort of technology out of it, but I would say the theme that you often see just in the growth of companies, sort of the early stages of a company, compliance is not sort of necessarily front of mind. So we're often having to remind people you can't sort of offshore your compliance efforts. You can't scale and then build a compliance program sort of after you scaled if it doesn't meet the sort of the risk associated with your business. So I think from that perspective, I think the work that we've had a chance to do collectively to learn about the digital identity technology to support identity verification by DeFi services that can be informed by a user's transaction history on the public blockchain has been really valuable to get at that sort of like, how do we start with AML, CFT front of mind at the beginning, the concept of these zero knowledge proofs, which, as you know, can enable a DeFi service user to confirm that their identity has in fact been verified without revealing that personal information. And then we've seen those tools to screen against sanctions lists being developed in the context of these tools. So I think that, and that's not meant to be an exhaustive list, but to endorse, of course, the lawyers want to make clear not endorsing any specific tools, but I think that those are important developments. And I think really it is the recognition that in terms of developing solutions to manage AML CFT risk in the context of these tools, is going to require that's sort of very consistent engagement with the private sector.
Yeah, absolutely. It's certainly an area where the policy and the technology communities can do a lot of good working together if they can bridge those sort of gaps. I wanted to turn to some of the work that Treasury has been doing directly. You mentioned in your remarks there has been a lot of action in the sanction space, including notably the tornado cash sanction, but that certainly wasn't the only one, trying to get after some of the well-documented, well-known sanctions evasion, money laundering activities that we do see happening. What's been the effect of those sanctions? Are we seeing less illicit activity on chain? Are those illicit actors just changing their tactics? Are they using different mixers? What are we seeing now that we have that track record of sanctions activity?
Yeah, I think what I would say is a great question. I think my reflection would be like, sanction, you're not going to sanction your way through any problem, certainly including this one. So it has to be sort of that basket. So if you designate a mixer and therefore cut it off from U.S. persons and financial institutions that are obviously invested in following U.S. sanctions, if you work with partners in the EU and the UK and jurisdictions where you see a lot of these value moving from, then that designation can be very effective. And I think we've seen designations be effective in that context. If we're still managing, but I think in that context, we have to prioritize going after the real challenge of jurisdictional arbitrage and make sure that bad actors can't just move these services to a jurisdiction in which there's a very weak AML CFT regulation of VAS or virtual assets or none at all. So all of that has to happen. And then you have to successfully communicate and clearly what you're trying to do. One, that we're not trying to prevent responsible innovation related to virtual assets, recognizing that the challenge, the perceived challenge, which I think is understandable, that given the insight that the public blockchains provide, there are going to be users that are going to want to preserve that privacy while conducting their transactions. So we've tried to, in addition to the designations, highlight through FinCEN the AML CFT obligations that a number of these mixers have, and particularly that even if they're not based in the U.S. but have U.S. touch points, that they're subject to those obligations. And then we've taken enforcement actions, obviously in different contexts, not just designations. Like an example is recently Helix, which is a mixer that was failing to comply with their obligations. So I think the challenge for us is we are in this nascent stage, whereas mixers in particular, as they're currently operating, are providing a way to move a lot of funds by illicit actors that are obfuscating the origin and the movement of those funds and obviously the destination of those funds. And it's also doing that in a way that's reducing law enforcement's visibility into those transfers. So it is no surprise that illicit actors are capitalizing on that dynamic and that vulnerability, and that is really challenging for law enforcement. So, I would again just emphasize we're trying to do policy, operational, regulatory, and use all of those tools to get after this challenge, recognizing that any one of them won't get it done.
Mm-hmm. Excellent. We've got some questions coming in from the audience now. So a question from Yaya. What would you say is the biggest illicit finance threat actor in digital assets, and why? So who really keeps you up at night?
I obviously in the two state actors I worry the most about are DPRK and Russia. I think with DPRK, you see how much they are relying on virtual assets in support of their weapons of mass destruction program, and that is a very significant national security concern that I worry quite a bit about. And given that obviously diplomatic engagement has been quite challenging with DPRK, this sort of cutting off this funding stream meaningfully, I think, is important. The second, in Russia context, I think just because we're seeing how much ransomware and sort of the darknet markets that are stealing U.S. person credentials and and other personal information coming out of Russia affiliated ransomware actors. That also is a really significant concern. And then obviously the concern that some of those resources are making its way back in support of the overall war effort is a concern.
Yeah, and I know we've talked about this previously, but particularly in the Russia case, the question about whether crypto assets could be used as a kind of a whole-scale measure to evade sanctions. And I think the common assessment had been that it certainly would be used, but the scale of the sanctions, the scale of the economic need, the scale of what Russia would need to, the assets that they need to move around far outpaces their ability to do that using those sorts of crypto assets. I mean, is that still kind of the assessment that you think is right? It's something we're worried about and we're tracking, along with kind of a whole range of sanctions evasion tactics that we know that Russia is using.
Yeah, that is still the assessment, and of course, as we know, most money laundering, proliferation financing, and terrorist financing is still being used via fiat currency and not virtual currency. So even as we see the potential that we may see some scaling of the use of these types of virtual assets for an economy as large as Russia's, it's not practical to try to do most of your sanctions evasion through virtual assets, and that's still our assessment.
Mm-hmm. Another question from the audience from Mark, who says, Bitcoin and Ether have been described as programmable financial instruments. Can you see a repurposing of these and possibly other cryptocurrencies that can actually put these technologies to use, for example, as tools for risk management? So kind of getting away from some of the financial applications towards more of the other use cases, the non-financial use cases of blockchain technology and protocols.
Yeah, I think sort of the know your customer and is again sort of in support of the digital identity opportunities. I'm not the tech guy, but it seems clear that that's a productive place that these virtual assets could be very, very, very useful. And certainly, as noted, like the underlying technology, it will be up to the market. The market will decide what's valuable and not valuable, but you can clearly see a number of positive use cases for these technologies.
Mm-hmm. Excellent. We've got another question here from the audience, from Jim. Can you describe your thinking on interagency cooperation with respect to financial intelligence and digital assets? So obviously we've talked a lot about Treasury's role. Treasury's not the only agency that's thinking about this or worrying about this. So who else are you working with on this in the government?
Yeah, we're as you know, we're on a very robust interagency working group thinking about CBDC, Treasuries, and my team's thinking about the national security implications of that. What a CBDC would mean for the United States, but frankly, they're looking at a whole range of things, like sort of the global role of the dollar, sort of leadership, continued leadership in innovation, looking at privacy, of course, illicit finance, but also financial inclusion. So, that's an opportunity to your point, to not always be focused on sort of the worrying among the interagency about these technologies, how we're looking hard at the opportunities as well. And then I would say, absolutely, I think there is incredible technological know-how across sort of the national security infrastructure of our government that we rely very heavily on, and then we bring a lot of obviously the subject matter expertise on how financial institutions and the financial system could be impacted by different policy options that the U.S. is making. So the 2022 executive order is really meant to reflect not a sort of a Treasury-led process, but a true whole government process.
Mm-hmm. Let me ask a slight iteration on that question as a follow-up. Obviously, other agencies that are very active include the SEC and the CFTC. You may have noticed, right? There's been a lot of enforcement action, some of which has not been well received by industry, to say the least.
I've heard.
Yeah, you may have heard. But kind of curious your thoughts on. There's an argument out there that the very aggressive, in industries where it's kind of regulatory and enforcement posture, lack of clarity, like there is a risk that Some of these companies will just move overseas. Crypto is, it's going to be a global phenomenon, right? Like, and it'll happen somewhere. Like that is not going back, into the closet or anything like that. So how do we think about those sorts of really long-term structural risks that might emerge? Are there conversations with SEC to think about it? I mean, it's obviously hard for them, right? Because they don't have a national security mandate, so it may not be forefront of their mind in terms of the risks that could play out over the next 10, 20 years if all of a sudden all of this activity moves offshore. And you already mentioned, it's really hard to think about weak jurisdictions, and there is an argument for trying to keep this within our regulatory perimeter. So how do you, in your role, think about those very complex dynamics?
I think it's three parts. I mean, the first is maybe a premise that some folks will reject, but really the idea that addressing these risks that we are all, I think, are collectively seeing associated with illicit finance are not inconsistent with innovation, but really to be successful need to be foundational to it. So I think sort of approaching sort of the regulatory work in that vein is important, and to the point, I think it's foundational, and it's sort of obviously represented in the executive order, but it's foundational to how all of these agencies are approaching this. And again, I know you all know it, but just moving your business offshore does not mean you're not going to be subject to AML, CFT compliance and sanction list compliance to the extent that your business wholly or substantially is in the U.S., regardless of the physical location. So I just had to put that caveat out there. And then I think the other, I'm not going to comment on what colleagues in SEC and CFTC and others are doing. We certainly are broadly supportive of other regulators taking action to protect investors and consumers and businesses, and ensuring that the companies under their regulations are complying with their obligations. But obviously, I'll have to defer to those agencies on their particular cases. And we're focused on identifying illicit finance risks, including those that would be associated with those non-compliant financial institutions offering services and digital assets. And I think you said it, but I think it's worth just repeating that the importance of the work that the FATF is doing, the bilateral engagements that myself and colleagues around our government are having on the importance of developing effective AML, CFTC compliance regimes in those jurisdictions that have weak or no compliance is actually really critical to our success for the reasons that I think you rightly identified. And one of the things that the FATF, I think is doing through its virtual asset contact group is developing, and I think are going to come out with lists, both identifying those jurisdictions where you're seeing a lot of virtual asset activity, so highlighting the real need to take priority action in those jurisdictions, and then just identifying how jurisdictions are doing and implementing the virtual asset AML CFT compliance standards, and beginning to really, I think, hold us all appropriately to account in our progress on this.
Mm-hmm. Yeah, and the U.S. has, in many ways, been a leader on the international cooperation efforts. I'm curious if there's other countries that you look to as a model for, being able to put in place these standards well. We're talking about some of the weak jurisdictions. Presumably, there's hopefully strong jurisdictions as well. Who do you think are kind of our strongest partners here, and that we think can work with to establish these standards, but also try to do some of that potential institutional capacity building in the weak jurisdictions, and really will be important partners as we think about raising the overall global standard?
Yeah, I think so. I've traveled to Japan to talk about this, and I think they've had a significant role of leadership in the context of the virtual asset contact group. Singapore, where I have not been yet, but hope to get out there, also has had significant leadership both in their domestic regulatory activity as well as in the context of the FATF. And I think we are learning a lot from both of those jurisdictions, and also looking at the things and sort of the development of financial technology within those jurisdictions, given that they have fairly robust regulatory regimes in place. So I think it'll be important to continue to talk to them and learn from them. And then again, I think identifying those jurisdictions that are heavily unregulated but have a big, vast community in them is going to be sort of the next urgent step. And I think in the context of this virtual asset contact group, the plan will be, which again, I think Singapore and Japan will have a big voice on, the plan will actually be to do exactly what you said, is to provide that sort of the training and the provision of resources in order to quickly lift up the sort of the quality of that regulatory regime in those priority jurisdictions.
Excellent. Let me go to a few more questions from the audience here. From Sengay, apologies if I'm not saying that name correctly. What are recent key findings from the Treasury Department concerning Pakistan's use of digital assets and US-based third parties for terror-related illicit funding?
Interesting. I think I would say with respect to Pakistan, particularly, that we, and again, this is probably no surprise, that we are seeing some use of virtual assets in the context of terrorist financing. We're seeing maybe a marginal uptick, and we obviously anticipate that use will increase over time as these resources and tools become tools become more available across the globe. But frankly, I think primarily in the context of terrorist financing, you're really seeing continue to see the movement of fiat currency as the main challenge, and it's all the sort of the housing of large sums of money and then bulk cash transfers and the use of money service businesses and the like. So I would say we are constantly trying to prioritize. We don't want to over rotate or under rotate, but certainly in the terrorist financing space, a big focus of our intention continues to be the movement of fiat currency.
Another question from the audience, welcoming your thoughts on the use of digital assets to deliver humanitarian aid or other authorized transactions to sanctioned countries without the involvement of the sanctioned government. So can this be a tool to handle, overcompliance, de-risking, getting financial services into some of those areas that may not have them because, the big banks have left?
Yeah, it's something that in my private sector engagements has been highlighted a number of times, and I don't know that I'm aware of like an active model, but it seems very interesting to me. That clearly, what I hear is one of the reasons why people are so excited about this technology is the capacity and opportunity to really make a material difference in the de-risking that we see, particularly in the context of humanitarian channels. So always open and interested to hear about opportunities using these tools in that space. But currently I'm not, as I sit here today, not aware of a particular model that we should be looking at. But that being said, hopefully me saying that will incentivize someone to say, I got one, or 100 people to say it's right here. So we'll look forward to that.
Yeah, you may hear after this. I think there are some, the UN's doing some experimentation. Other groups are doing some experimentation, really trying to get at that last mile, whether it's really blockchain or some mix of financial services and fintech. So I think there's some interesting stuff going on there.
And we looked at a whole range of mechanisms to your point, to get after the last mile problem. So I think to that point, very open to creative ideas.
Excellent. So from Kate in our audience, how has Treasury worked with other agencies and partners to raise awareness among the general public in the US and abroad to encourage reporting information that could lead to the disruption of illicit financial activities that exploit digital assets?
That's a really great question. So, one of the things as Treasury, we're obviously been focused on financial institutions, other covered entities, but the way we primarily engage with the public is through press releases about our actions, obviously FAQs as it relates to designations or other enforcement type actions that we take. We have enforcement guidelines, so hopefully the public understands sort of what the things that we're looking for, both in the context of AML CFT compliance and as well as in the context of sanctions compliance. And then trying to use opportunities like this, but other forms of engagements to really uplift the national security threats that are top of mind for us, so that hopefully the public has a clear sense of what we are trying to prioritize. To your point about sort of clarity of action, why we're taking the actions that we're taking. To the extent, again, offer forums to engage in this conversation and really uplift it to a broader audience. That's something that we're always open to and more than happy to do, because it is important that we get, I think, just beyond the regulated community to the broader public who are using these and engaging these types of tools and services. So understanding, again, sort of the risks, the illicit finance risks, but just broadly the challenges that we see from a national security perspective would be really valuable.
And we haven't touched yet on the role of Congress, and obviously there's loads of proposals floating around the Hill on a range of different digital asset ideas, and I won't ask you to comment on all of them, but I am curious on your thoughts on particularly Bank Secrecy Act, which has come up quite a bit as a framework that potentially could use some updating to kind of match the realities of today's digital world and these technologies. Treasury's hinted that that's something you're considering. Is that a framework that does need an update at this point?
Yeah, so we're constantly, we are considering it and looking at it. And the thing that is, I think, most valuable to us in the context of that consideration is sort of specific feedback that we hear from industry about where you perceive there to be a compliance gap or compliance uncertainty, notwithstanding sort of the frequently asked questions and other forms of guidance that we provide. I think it is really most helpful to get that sort of specific form of feedback. Hey, I'm like doing X. This doesn't work in the context of that business for some reason, or we have this tool that does Y, doesn't work for one reason or another. So I think so as we continue to think about sort of from a regulatory perspective, whether there are changes we should make, we're also constantly engaged with members of both parties on their ideas. And to your point, there are a lot of them out there. So just trying to be a good partner to our Hill colleagues as they continue to work through these, as we all acknowledge, really complicated issues. And how do we, I think we all have that shared goal of preserving responsible innovation. So making sure that we're building in a way that's going to do that.
Let's turn to China for a moment. There's been a lot of attention paid to China's digital currency. So it's central bank backed digital currency, which is different than the private sector blockchain. Yep. Some concerns about whether China is racing ahead. The U.S. is, falling behind in this particular area of technology. There are obviously very different models, as one might expect, between a U.S. private sector led and a Chinese state-backed way. So kind of curious your thoughts on how are you looking at China's developments with the national security lens? Are we falling behind? Are you worried from a national security perspective about those developments?
No, I wouldn't say from a national security perspective, I'm particularly worried. I think it's the right line of inquiry in the context of the Interagency working group that we're on now to think about sort of the national implications of either developing a CBDC here in the United States or not. And certainly, as you noted, one of the implications will be other countries will do what they will do. And so we just have to be in a position to effectively evaluate that dynamic for policy leaders across our government. So that's sort of the frame where the question is most clearly called, and that work is very much ongoing.
Excellent. Well, I know we are coming to the end of our time with you, and you've got
it went by so fast.
We'll let you get back out to the mountains in a minute. But I do want to give you the opportunity to, highlight anything that we should expect coming from Treasury soon in this space. Obviously, tons of activity going on, a lot of engagement that you're doing across industry, across the interagency. I won't put you on the spot and ask you who you're going to sanction next, although if you would like to tell us that, you are welcome to.
No.
But what should we expect? What are your priorities for the next, 6 months to a year as you think about kind of where we need the most urgent action?
Yeah, it's sort of a boring answer, but a little bit is going to be more of the same. I think we're really prioritizing, and we'll invest a lot of resources in the challenge of jurisdictional arbitrage. I think we do need to incentivize, obviously, innovation that is responsible, whether it happens here in the United States or anywhere in the world. So working with partners on that is a real big book of business for us. And then I think continuing to engage more effectively with the private sector and more consistently with the private sector is going to be a priority over the next 6 to 12 months. And then just making sure that we're identifying what, frankly, that we're seeing, which is the lack of AML CFT compliance by some of these virtual asset service providers, and potentially taking enforcement action where we see that, because it is also clearly a significant illicit finance risk, and we need to address that head on as well. So those are sort of the three, I think, big lines of efforts over the coming months, and as you know, we'll continue to try to identify malign actors and take disruptive action however we can, when we can, where we see it. So that work will continue apace, but I won't give the bad actors any preview that we're coming for them today.
Fair enough. Well, thank you so much for taking time out of your busy schedule to talk to us. It is a pleasure to work with you and the Treasury team on these really important issues. We do wish you the best of luck at Aspen Security Forum, keeping these issues high on everybody's agenda. And on behalf of the whole CNAS team and the task force, which has been a great effort over the past year, thank you for thinking about these and your leadership on these issues. And I will also, as we close out, thank our virtual audience for tuning in and offering up some good questions. I don't think we put them on the spot too much, but good to have a candid conversation. And thank you as well to the CNAS comms team for all their work putting on another great event for us. Thanks, everyone.